صباح الخير. قبل ما ارحب بضيوفي واقدمهم حابب اشكر حضراتكم واشكر المعهد المصرفي بقياده الرئيس التنفيذي الاستاذ عبد العزيز نصير وكل الزملاء الحقيقه القائمين على رعايه المؤتمر. مؤتمر هام جدا وهام جدا لكل العاملين في القطاع المصرفي والمؤسسات الماليه كمان اعتقد كافتها يعني. بداية أحب أهني حضراتكم بمناسبة حلول excuse my Arabic please gentlemen I have to just celebrate with my colleagues two events. The first event is our Eid Adha that will come after 10 days, and the second one it's a national event that will be in the 30th of June. That's the date of the Egyptian People Revolution against the territory group of Muslim Brotherhood. بحيي حضراتكم وبحتفل مع حضراتكم الحقيقة النهاردة بمرور 9 سنين على ثورة 30 يونيو وبنحيي فيها ذكرى شهدائنا الأجلاء الحقيقة اللي لولاهم ما كناش قاعدين بنحتفل بهذا المؤتمر. فتحية للشهداء. وطبعا كمان بنوجه التحية للمؤسسة الوطنية المؤسسة العسكرية الحقيقة كانت بجانب الشعب المصري في هذا الحدث. Ladies and gentlemen, let me please, before I introduce our guest speaker, talking in 5 minutes or less than 5 minutes for the risk management. Risk management is a life. Risk management is not a function, in my humble opinion. And I used to say to my colleagues in every place I have worked in risk management during the 25 years ago, that risk is a business partner. Maybe some of the risk officers, and I used to be one of the regulators at Central Bank of Egypt during 9 years, and I used to say to my colleagues in the banks and in the supervision department, banking supervision department, that we are a business partner. Why we are a business partner? From the topic that the gentleman will cover, you can see that any default or any risk incident may cause a financial risk. It will hurt the association that we are working in. So if the business is working by full capacity and we are not aware of the risk that may occur in our association, and sometimes, like I will tell you in the end of the panel, the session, that it may lose all its profits in a single incident. So risk management is very important. We are talking about enterprise risk management. We are talking about resilient risk. We are talking about residual risk, risk tolerance. Many of the terminologies that we are talking about is very important. So during this panel, I believe that we will cover the guest speakers, distinguished guest speakers will cover most of these topics. Let me first introduce our guests before they will take their topics. We are pleased to have Dr. Richard Abel Otto on a conference basis and virtual basis. Hi, Mr. Richard. Mr. Richard is the Vice President at the Global Association of Risk Professionals, GARP, and he serves in the Certification and Education Program Group as Product Development Lead in the Financial Risk Management. I'm pleased also to have with us here my colleague Abeer Khedr. Abeer Abeer is the head of cybersecurity at National Bank of Egypt and chair of the Cybersecurity Committee and at Federation of Egyptian Banks. Abeer is the Information Security Director at the National Bank of Egypt with more than 20 years of experience in technology, information, and security. Let me also welcome here Our colleague, Mr. Basel Chaban. Mr. Basel Chaban his origin nationality is a Syrian. He's a brother. Mr. Basel is the head of the Risk Management and Regulation Competences Central at the International Advisory Service at Frankfurt School of Finance and Management. Mr. Basel is the director and the head of the Risk Management Regulation Competence Center at the International School of Finance Management in Frankfurt. Welcome, Mr. Basel.
Thank you very much.
Finally, our colleague and guest speaker, honored Mr. Henry Wayne. Mr. Henry is the EMEA head of stress testing in Citibank Group. He will explain what is the EMEA also, because it's very important to have a knowledge about the enterprise risk management and stress testing in Citibank. Within the independent risk management function, he is reporting directly to the regional chief risk officer of the EMEA in Citibank Group. Welcome, Mr. Henry here. Okay. Then let me start with Dr. Otto. The first topic that he will cover, the resiliency in risk management. We are talking about something new to the risk terminology, resiliency risk management. Every year, the risk people is giving us a shock of a new function that we have to abide it with. So, first, Mr. Otto, we want to know what is the resiliency of risk in risk management, and why it's important, the importance of the resilience on the risk management, and what is the relationship between the organizational risk and the resilience risk management. And finally, what are the financial tools in the organization that we can use to ensure the resiliency in the management with the proper risk management. Please, Mr. Otto.
Thank you very much, Mr. Tarek Kholy, our moderator. Thank you very much, conference participants and all the panelists on this in this session. Let me start by addressing really what resilience in risk management is. I could put resiliences in two important categories: financial resilience and operational resilience. Today, I would focus more on operational resilience and consider financial resilience as part and parcel of our traditional risk management, where, of course, we are interested in the capital adequacy, solvency, liquidity, and so on, recovery and resolution of the firm. So that is financial resiliency. The more critical part really is the operational resiliency, which really is the ability of an organization, ability of the bank, ability of any financial institution to provide business services on a continuous basis in the face of adverse operational events and disruptions by, number one, anticipating; two, preventing; three, learning; four, recovering; and five, adapting to such disruptions. So this is really critical component of what we really call resilience. And resilience is important, not just for the firm, but also financial market infrastructures, like the entire banking payment system or the central clearing system, as well as the financial sector as a whole. Now, when we talk about disruptions, which really resilience is all about, disruptions may come from cyber attacks, which certainly my colleagues will talk about. Disruptions may come about from war, climate-related events and risks, such as floods, hurricanes, and may come about from pandemic, which certainly we have been going through over the last 2 to 3 years. Could also result from reputational damage and general volatilities in the capital markets. So certainly resilience is important. And why would we consider that really significant, especially in our financial industry. I would discuss the importance of resilience in two areas. Number one, because of the benefits that resilience offers to the financial firms. But two, it's also because we cannot do without resilience. So first of all, why should firms consider this as an essential part of their business operations? Number one is because, of the disruptions that companies are continually faced with. And such continuing disruptions may come about, first of all, because of the scale of innovation and increasing competition now, as well as customer demands. That is critical. Banks know, and various firms know, that the scale of innovation is increasing, and that is the major source of disruption that we cannot run away from. Number two, there is continued digitization. New technologies are emerging, and very rapidly, and there is increased levels of automation, which certainly is a necessary source of disruption that we should prepare for. Three, there is reliance on legacy infrastructure by banks. There are certainly a number of financial institutions that still do that. And of course, as you know, legal infrastructure, there is a lot of difficulty to integrate this with new technologies and processes. And because of reliance on legacy infrastructures, definitely, the degree of disruptions is likely to be much higher. Number four, of course, generally there is increased expansion on reliance on outsourcing to third-party service providers. And as a result, now there are certainly extents to which we should certainly pay attention to what risk these third-party providers certainly prevent. So that's a potential source of disruption that will continue, and resilience becomes quite important. And number five, financial institutions are sharing more and more information now, and actually much more broadly, and this sharing information could be voluntary, but it could also be a result of regulatory compliance. And of course, the more you share information, certainly the more you're tagged and networked into that possibility of disruptions. And finally, of course, we continue to have cyber risk as a critical risk that we should pay attention to. But the important thing is here, which is important for resilience, is that cyber attackers are actually innovating ways of exploiting the firms and the banks' vulnerabilities. They continue to increase their sophistication of malicious attacks. And because of these reasons, resilience becomes a very important, certainly, theme, and in fact, actions that any bank or any financial institution should take. But of course, there are benefits of companies that are highly resilient. I could mention just 4 areas. Number one, of course, when you're resilient, certainly you have the ability to reduce and optimize your overall risk exposures. Number two, companies that are resilient are better focused. They drive investments towards, more important areas. And three, resilient firms are able to support the innovation agenda of the business without compromising on risk management. Of course, there is no limitations at all to innovations, and banks should be in that forefront, whether because of the need internally or the desires and demands that come from the customers. And finally, of course, a resilient financial institution is more effective, more efficient, because of reduced costs and streamlined processes and efficiency that is enhanced. So, ladies and gentlemen, risk resilience is important, But one might wonder, as my colleague suggested in the questions that were posed to me, then how can we determine or certainly describe a relationship between resilience as we now know it and risk management, which is the traditional approach we have used to run our businesses? Well, the two are strongly related. Resilience and risk management have, a single focus goal of sound business continuity. Certainly, of course, you want the profit and loss to have a positive impact, and so forth. But of course, there is a distinction here. Whereas business continuity is the overall goal of both resilience and risk. As I mentioned earlier in my definition of resilience, the business continuity in terms of the traditional risk management really focuses on recovery and sound resolution and so forth. But the slight difference with resilience is that is the focus of preventing, anticipating disruptions and adapting to disruptions. In other words, how can we learn to live with the disruptions? How can we adapt to the system? And that's so important. But there are also other areas where the two are related. Of course, governance is important in both cases. Governance is important, where the role of the board of directors, the role of senior management are so critical in making sure that resilience and risk management is a culture for the organization.
Dr. Otto, I'm afraid that we have just 1 minute left for your presentation.
Yes, like this. So let me conclude by, of course, highlighting very importantly, sometimes we may ask the questions, what tools do we have to ensure, resilience and risk management? Of course, one important requirements for resilience is that a firm must have impact tolerance metrics. You must have measurable metrics. Scenario testing is one of the tools that we have. For instance, reverse stress testing, where, for instance, in terms of climate-related risk, we could be able to assess what happens to our probability of default in the event of a given transition risk or in events of a given physical climate-related risk. That is very important. And the other tool is for the firm to be able to map resources. Mapping resources becomes important, and it's more or less taking inventory of people, processes, technology, and other information required to deliver critical businesses. I thank you very much. Certainly, this is a broader area that we could take much longer to discuss, but I'm happy that my colleagues on the panel will certainly elaborate on some of these aspects of resilience as well. Thank you very much for listening.
Thank you, Dr. Richard. And can I ask you, I ask you if you'd please to stay with us on the conference basis until the end of the panel, because some of our audience may ask questions, and for the distinguished audience, can I ask you, when you want to, we have two types of asking questions through the app, like they told me, in these new devices that I cannot use, and on the other, but I'm lousy in technology, by the way. You can make any cyber attack from my email. And on the other hand, you can use the ordinary that I prefer, the mic. Okay? This is a very important topic, Dr. Richard, resilience and risk management. But I will keep my question to, after Abeer, to Mr. Basel Chaban and Dr. Henry for the resilient risk management and the importance of the political risk that is now affecting the economic risk and creating economic risk to the financial institution. The conflict of the Russian-Ukrainian war and the global financial crises in the world that affect most of the countries in inflation, in instability in interest rate hikes, in foreign currency resources, in the high prices of their commodities, essential commodities like we have here in our country, and it may affect the financial institution, especially the banking sector. How can we prevent it? Through the enterprise risk management and through the stress testing modules that we may use. It will be later a question, address for a question to my distinguished guests. May I ask a question to my colleague, dear colleague Abeer, about the cyber security and the information security? As you know, again, in the Russian-Ukrainian conflict, what did Russia do to Ukraine at first time before they attacked it? Materially, what they do? They do attack their information technology system, the network. They destroy all the IT defense network for the Ukrainian army. And then they destroy the communication between the governmental units inside Kiev. So it was a startup war for cybersecurity before the military has moved. So my question and the topic to Abeer, considering the fast evolving of cyber threats, what are the latest cybersecurity trends that can keep the banking sector safe while continuing the journey of digital banking? You see, Central Bank of Egypt and all central banks are encouraging the financial institutions, especially banks, to create more digital services. And in our governmental association, they are using the digital services for the people in the country. But if we depended on the digital transformation and the digital service only, and we did not protect our system, what can be done? How can we secure our information network? Abeer, please.
Thank you, Mr. Tarek, for a very comprehensive question. It can take hours to address such a question.
It's written by my colleague.
Yes, but Khalina, for the sake of the time of the panel and the interest of the audience, to go over a short presentation that we've prepared to discuss the threats and important measures to mitigate them.
You can use it, or you can use it.
Before we go into the threats and the continuously evolving threat landscape, cyber threat landscape, let me reflect on yesterday's speech by Mr. Chris Colbert. I was listening and I was very happy because what I wanted to say about cyber threats was beautifully aligned with what he was saying, although we didn't have a previous chance to discuss this together. He focused that in order for banks to adapt and in order for banks to innovate, there were four important pillars that they have to make harmoniously work together: the people, the process, the technology, and the purpose. In cybersecurity, we get the purpose of what banks need to do from our business colleagues, from our business partners. They tell us why they are doing those digital services and what are we hoping to achieve from them. We have to take care in cybersecurity when we implement controls for the people, process, technology, but there's another fourth pillar that I would add in substitution of the purpose. Purpose will always be there, driven from the business. The fourth pillar I want to add is oversight. From several years of experience, I can tell you that when you implement controls for people, process, and technology, they don't work properly and consistently without oversight. Where sometimes people confuse oversight in this is management support. If management give us support for cybersecurity initiatives, then this is the oversight needed. No, it's oversight is actually more than that. Oversight is having the proper governance structures in place, is having management engagement, not only support. In the cyber security initiatives, realizing the cyber risk and how important it is nowadays, as Mr. Tarek said, considering that it's now used as a cyber weapon. It's a weapon, it's no longer just a simple risk. So let's go through the cyber threats that exist today, and let's attempt to classify them علشان to better be able to prioritize the measures to mitigate them. So if we think of cyber threats, we can think of 3 dimensions. We can think of cyber threats that come to us externally. Externally from cyberspace. يعني it could be ransomware. وكلنا عارفين what ransomware is. It could be malware, it could be spyware, and it could be attempts and attacks that attempt to exploit vulnerabilities in our perimeter security. And it could also be what we call zero-day threats. إيه هي zero-day threats? Zero-day threats are مثلا vulnerabilities in operating systems in our infrastructure that are recently discovered by security researchers, بس لسه the technology vendors did not find patches or mitigations for them. So exploitations may take place in the wild, and we have to strengthen our monitoring, our SOC activities, Security Operations Center activities, to be on the alert for such threats. We have another dimension for threats, insider threats. طبعا insider threats have always been existing يعني since long before cyber threat landscape evolved in what it is today. We have the fraud, typical fraud, utilizing or exploiting access privileges in systems to commit fraud. There is the IT sabotage risk. We know that IT, we have some privileged users. Privileged users have, privileged access to databases, to systems, and that's also another threat that we have to take into consideration when formulating our comprehensive strategy, cybersecurity strategy. We have IP strategic information theft and leakage. Employees may leak confidential information outside the borders of the organization. We have a third dimension that has emerged in the last few years eminently, which is third-party risk, security risk. Now, as we move also into open banking and digital banks, we are going to integrate more and more with third-party companies. Whether fintechs or other companies that provide data analytics, etc. The risk from third-party integrations becomes of a primary concern. There is also the risk of third-party compromise. The third parties themselves that we consider as trusted partners to us, they themselves may be compromised. So it's very important. We have seen in this year, central bank, for those of us who's working in security and risk, we have seen that they have reported several cases of third-party company compromises, not only abroad, but also one of the large technology companies here in Egypt also. A trusted partner to many of the banks and the companies. So the risk is actually materializing. It's no longer a theoretical risk that we are putting in our plans. It is there actually. And then there is also regulatory compliance issues, which we'll talk about more later. Cyber threats, we have classified them into possibly 3 broad categories. We have also cyber risks related to the new technology. Yani we're always using new technology to improve the digital services we're providing. We're using AI, we're using facial recognition, we're using liveness detection algorithms, we're using blockchain, we're using all these new disruptive technologies. Even new types of architectures. Digital banks, as they progress now, they want to move to what they call microservices, containerized architecture. This technology introduces even new risks. So, for example, if we see risks introduced by even the stay-at-home, the period of the COVID, we were having our employees working remotely through VPN. We were having our employees bring your own device. They were using their own laptops, their own personal mobiles to access the company email. So this introduced also new risks. In addition, of course, to APIs and open banking. When we move into open banking, API risks become very important. APIs, for those of us who are not familiar with the term, it's application programmable interface. This is the link or the integration that you do with third-party companies to exchange data. If this link or this integration is not properly secured, then it can lead to a leakage of your data or compromise of your bank's data or your customer data. We also, when we are looking to digital banks and we're looking into identity management, digital identity management, we're looking into liveness detection algorithms. We're happy with the technology, but the technology also has false positives. Sometimes the accuracy in detection rates is not that high. So we need to look into this because this technology on its own might is introducing more risks. We were saying also that we have the legal and regulatory frameworks that exist in place. I personally see them as opportunities. And when I put them to management in the SWOT analysis of the strategy, and we said we have so many frameworks and so many regulations that we have to deal with, and they said, this is a cost. Maybe this is a cost. I said, no, this is an opportunity. This is a true opportunity for us to work through those requirements and enhance the security posture and enhance the resilience of our implemented measures.
Abeer, can I save 2 minutes for myself in order to ask you a very important question about the topic after you will finish?
All right.
Please.
So the regulatory framework, we're having the cybersecurity framework that the CBE has recently issued. Very comprehensive framework that has hundreds of controls that banks can implement to increase and enhance their cybersecurity posture. We have local laws and regulations as well. In addition to the central bank regulations, we have the data protection law, we have the cybercrime law, and we have the new banks law. Bardo, to get a flavor, a bank, مثلا like the National Bank of Egypt, we operate in several jurisdictions. It's not only Egypt. We have branches in the US, we have branches in China, in subsidiaries in Sudan, in the UK, etc. In each and every jurisdiction, we have a regulation or a cybersecurity standard that we must comply with. So really the regulatory landscape in its own might also presents a lot of opportunities and also a lot of risks if we do not comply with, because ultimately if you don't satisfy a regulation in a country where you are operating, you may lose the license to operate there. So for example, in Saudi Arabia, we have the SEMA cybersecurity framework, very much similar to CBE's framework. In China, we have 2 data protection laws. In the UAE, even in the UAE, where we also have operations there, there are 2 laws, 2 regulations, one that is federal and another is in the DIFC. So a very large and wide regulatory landscape. As we said, the frameworks offer us the opportunity to have a comprehensive control to implement. So, to prioritize our efforts, we need to look into data from actual incidents. Here we have the Verizon data breach investigation report for the year 2022, for this year. The numbers are very interesting. Those numbers are derived from a large data set of 23,000 cybersecurity incidents and more than 5,200 actual security breaches. The alarming number, and the number that coincides with what Chris Colbert said yesterday, Chris said, remember the number 84%. It signifies failure due to a human lack of inability to adapt. Here, in this study, 82% of all security incidents were because of the human element. The human element being tricked or phished and acting as the main entry vector to attacker to attack a network. Another interesting figure is that 62% of the intrusions in the report were from supply chain attacks. As we said, supply chain are third-party trusted companies that we deal with. If they are compromised, they themselves represent a threat to us. Other data in the report shows that ransomware continues to be on the rise, as well as denial of service attacks. And we have seen denial of service attacks deployed and used heavily in the Russian-Ukraine war, as well as credential theft that is still occurring, and heavily so, not even in our region, but also in Europe. If you follow the Interpol pages, you will find that they have so many operations that they have worked on to detect and seize many cyber gangs that were doing this cyber credential, user credential theft. So those numbers guide us into how to prioritize our efforts. We can prioritize our efforts according to the numbers. The numbers say that 82% is the human element. Then in our cybersecurity strategy, we need to dedicate a big chunk or a big focus to awareness, customer awareness, employee awareness, and we have to get creative with the awareness message that we are trying to send to our customers and employees, not only to engage them, but to make sure that they understand and they stop and reflect before clicking a link or following a malicious email. So this becomes a very important aspect. Also, utilizing technology to monitor and profile user behavior. You can use user behavior analytics to make profiles for users and detect, therefore, violations that they potentially can make. You can also implement technology for privileged access management to mitigate against this risk of privileged users and administrators. When you go to application security, you also, if you're going to invest for digital banking, you need to invest heavily in mobile shielding. You have to make sure that you follow the software supply chain, because when you do digital banks, you work with the companies that prepare the software for you, and they may depend also on other third and fourth parties. So you have to follow and monitor this software supply chain. And you have to pay close attention to change and release management. A lot of problems occur when this process is not properly governed.
Abeer, can I ask a question?
Sure.
It's very difficult to make the lady stop talking, especially if the lady is your wife, you can make her stop talking. But I have several questions.
Yes.
I believe it will enhance your presentation.
Yes.
Did you see a part of the Central Bank of Egypt effort in the cyber
yes.
security department that headed by Dr. Hazim Sharif, and the messages that we received overnight in the weekend as CEOs of the banks and the head of security of the bank, and we should deal with it in a proper and a very fast manner. Did you see it's enough that we are depending on a third party like the regulator to guide us for any cyber attacks that may affect our systems?
Thank you for the question. طبعا the central bank is providing us with alerts, not only the threat intel information, but also information regarding actual incidents that may be happening in other banks, and anonymously sharing their indicators of compromise. So this does not replace the necessity that each bank has has in place its own security operations center, has its own monitoring function, has its own threat intel function. And when we say threat intelligence, it should not depend on one single source. Threat intelligence has to come from multiple sources. We were having reliance at times on threat intel from the Russian side or from the American side, but a good deal is to have multiple sources for threat intel.
My second quick question.
Yes.
How can we spread out the culture of the information security among all the staff at the bank? I know that people used to, for the internal communication in the mails, they used to open 3 important mails. At the first of the year, the incremental increase in the salary, and the profit share, and the upgrades. Other than that, believe me, we have a mass in communication at our association that we should take care about it. How could you see that the financial institution like a bank can spread out the culture and enhance it for the information security among their staff?
Thank you for another important question. Security awareness efforts, as we said, must be creative, but also in order to get the message clear, there has to be phishing simulation campaigns. Yani, you were giving examples, so those examples need to be practiced by the employees in the organization. They see samples of those phishing emails, and they get to know how the real phishing emails look like, so that they practice this frequently. And then what happens? Increase in awareness. But what happens to those who do not pass this phishing simulation test? You pay additional attention to them. And what happens if they fail again? They must be put on watch lists, you know, because they really present a threat to the organization.
My final 2 questions for your presentation. The independency of the information security department at the bank, how can we get it, and what is the proper reporting line you suggest? This is the first one. Second one, does the banks need to have, like they have a budget for the training, Dr. Abdelaziz, should they have a budget for the information security applications?
Thank you for another now tricky question, because there is no right or wrong answer. There is
I will
no
not
standard.
tell Mr. Okasha about that.
So the correct reporting line, if we take the CBE cybersecurity framework as a reference, then it says that the CISO, or the Chief Information Security Officer, needs to independently report to the CEO or chairman of the bank. This may not be the case, not in Egyptian banks only, but abroad as well. You will see many data and many statistics from US banks and EU banks where the Chief Information Security Officer does not report to senior management. Of course, reporting into risk is another option. Reporting to the CRO or head of operational risk is another option. However, with that option, my personal opinion, and this is a big disclaimer, doesn't work very well also, because it doesn't have what do we say, the promptness to communicate cyber risks and the need to promptly act. Sometimes in cases where you have an incident or where you have an important decision to make regarding cyber threats, you cannot wait till the next risk committee. You know, you need to have a direct communication line with the management of the bank, because they are ultimately accountable for cybersecurity of their banks and their customers. So that's the first portion of the question. The other part was?
No, I asked it already, the investment, okay. If you have a rest, please, you have 2 minutes only.
Okay.
In order to have enough time for other speakers.
All right. So we were saying that the actual incidents that happened over 2021 and before, give us a guidance on how to prioritize the mitigation measures that we need to implement and put in place. We were speaking about application security and supply chain risk, and before addressing the human element, very important. And then it never expires, the infrastructure, security and monitoring. Very important, patching. We said this, we had the SAIB conference 5 years ago. I think it was in Canada, and we had a whole panel discussing the importance of security patching. It stays very important today, remains very important today, patching all your layers, patching databases, patching operating systems, patching endpoints. Those regular patches fix vulnerabilities that attackers exploit. If you don't patch regularly and update those patches, you remain vulnerable and susceptible to those zero-day threats. Let's focus also on one more thing. AI is now trending to use in digital. AI is also very useful. Machine learning is very useful in cybersecurity, because with machine learning, we automate incident response. We elevate the time that is unnecessarily spent by the Security Operations Center analysts in, those indicators of a compromise. Let's go manually fix them manually block them on the devices. AI can help automate this process. Also, the involvement of management with us in the tabletop exercises. Of course, we have our risk management colleagues here. They can talk more about tabletop exercises. But for cyber, it's very important to include in the tabletop exercise with executives recent cyber incidents. What if it happens to me? How do we act if we practice our current incident response plan? What is the shortcomings? Shortcomings, auditors, of course, tell you about the shortcomings, but when you discuss them in a tabletop exercise and simulate how you're going to respond, you conclude additional lessons learned that are very helpful in enhancing your cyber incident response plans. Finally, I leave with this important quote from Bruce Schneier. Bruce Schneier, of course, is a very known cybersecurity expert. In cryptography, he says, security is not a product, but a process. لأنه sometimes people say, let's buy the firewall, let's buy this important technology, let's use AI. Alone, it doesn't work. Consistently implemented, well-implemented cybersecurity processes, governance processes are key to good practice cybersecurity hygiene. Thank you so much.
Thank you, Abeer. Let's move to the third topic. We are hearing since 25 years ago about risk management in Egypt here. And some of the people, it started with the credit risk. Then it's moved to the operational risk and market risk. And then added by the retail risk and reputational risk and cybersecurity infosec. So some people was talking about the consolidated risk management. And some people was talking about the integrated risk management. Now we hear the new terminology, the enterprise risk management. Our guest speaker here, Mr. Basel Chaban, I want to ask you about what is the meaning of the enterprise risk management, and how do we do the enterprise and risk management between all risk function in our association, and what is the importance of having this enterprise risk management, and does enterprise risk management meaning that we can make a cooperation or integration between other control function like audit, like compliance, governance, and internal control with the risk management, and what is the future of the enterprise risk management in the banking sector? Please, Mr. Basel.
Thank you very much, Mr. Kholy, and thank you very much, everyone, for joining us today. Again, I want to repeat what you said at the beginning. In advance, happy Eid. I wish you all.
Can you close the mic to you? Close the mic, please. Your voice, yes.
And also, happy National Day for the coming Thursday. I hope you enjoy a nice and long weekend. For this purposes, we have a short presentation, so I'm not sure if it's still in.
I think it's ready. You can go to the podium.
Yes. So, enterprise risk management framework in 9 minutes. This is a huge operational risk. I need to literally manage in 9 minutes, summarize all, what does it mean operational, what does it mean enterprise risk management framework, and how we set the founding for enterprise risk management framework in the banking sector. Let me start by taking one step back. What does it mean exactly, risk? I mean, risk is all about two elements. It's about first, the probability that an incident will happen in the future. What's the probability that such an incident or such risk will happen in the future? This is the first element. And this probability can go up to very high probability. This type of risk happen every day, and we expect it. We live with these risks, to a very, what we call them, the tail, or the tail of the distribution, the very rare risk. And as a human, we tend to overlook these risks. A very good example, this is the unfortunate incident of COVID-19. No one ever expected a case where all business around the world will be shut down. No one will be able to work, international financial crisis around the world. This type of very rare incident with a very rare probability and also risk. Of course, risk management is all about measuring this probability. What's the probability of such incident, whether it's a high probability or a very low one? Very important theory, what we call it the black swans. This is also an incident with a very low probability. As a human, we tend to overlook them, and I think Henry, when will speak about stress testing, where we need to identify particularly this very low probability. The other thing is there is a probability of a risk, how much we will lose. These are the two component, probability and loss. If there is a risk, how much we will lose. And as a risk manager, as an enterprise risk management framework, we need to measure this and we need to estimate this. How to do it, how to measure it, there is one methodology and one important methodology to estimate risk, which is looking to the history in order to predict the future. What Mark Twain said, history does not repeat itself, but often rhythm. That means there is a trend. We can analyze our historical data in order to pretend the moving in the future. And that's come the importance of data when we speak about it. It's very important of having historical data, building database, having large data, and all the data management aspects. That's the best way to try to predict the future, try to predict the incident that could happen in the future in terms of risk management, unless you want to do another way, like reading crystal ball, which I wouldn't recommend in the banking sector. All right, enterprise risk management framework is all about answering a lot of questions or being able to answer these questions in a bank. Some questions such as, what type of risk are we going to face in the future? How are we going to manage this risk? Are we well equipped to manage this risk? What's our risk appetite? What level of risk are we accepting to take? Do we have enough information to measure, identify, overcome these risks? Do we have the policies, procedures? Do we communicate correctly with our team about the risk that we are facing? What type of response we will take if we face any risk? How quick our response will be? Which tools we will use? How we will gonna estimate this risk? And finally, what type of stress testing we will do to try to find even the extreme cases of risk? And as you see, all this question, being able to answer all this question in organized way, this is all about enterprise risk management framework. And in the heart of this, the culture, the risk management culture, we'll see it later on. Everyone in our bank is a risk management officer or risk management champion, risk management responsible. Now, the question that we usually been asked as a risk management expert, what the way to set a risk management or enterprise risk management framework? And the answer could be summarized in this slide. I mean, this very big slide and big house, it's the building blocks for an enterprise risk management framework in a financial institution, particularly in the bank. If we can go from the top to the bottom on the house of the enterprise risk management framework, on the very top said the strategy, the risk management strategy, and usually this is identified by the board, the management and supervisory board of the bank. This is the overall risk strategy. And this is the very famous document, what we call the risk appetite framework. What's our risk appetite? How much risk we are willing to take? And that's, of course, based on which business we are running. If we want to lend to women-led SMEs, maybe we are willing to take more risk to penetrate the market, to serve these segment of client. If we have some development goals, we want to go to startups, we want to go to rural areas, we want to tap the untapped segments, we play with a bit of risk appetite, and the management said, we are willing to go more, and we are willing to take more risk. We are eager to take this risk in order to serve some particular goals. This is the top of the enterprise risk management framework, the strategy, the risk appetite framework. This is the guiding book for all risk management. Now, this strategy will be translated on the second dimension, which is operating model. Which operating model we have to operate and manage the risk. And that means we should have the risk governance, who's responsible, what's responsibility, what's duty, which committees we have, who will be reporting to whom, what's the structure of the governance in our risk management. We should have the risks organization, how we organize the work around risk management, reporting, and so on. And this should be written clearly in processes, policies, procedures, well written, well documented, and risk all about documentation and being able to document this. Finally, we need to make sure to build the culture. We don't end up only on policies that no one read or no one implement. We need to make sure that the risk culture is inherent in our institutions, inherent in our bank. That means every single employee of the bank knows what risk we are taking, knows what exactly our understanding for the risk. One of the challenges all banks face around the world, and that's particularly before the financial crisis back in 2007, if you go home now and download the annual report of any banks from 2007 or 2006, take, for example, Royal Bank of Scotland or Deutsche Bank, and download the annual statement from 2007, and download the one from last year, you will see the risk report from 2007 is a shy 1 page or 2 maximum, while now they're writing a box of 100 pages around risk management. That's culture shift. Of course, it's a unfortunate result of the financial crisis, but this culture shift are about understanding the risk. Now, in a lot of banks, there is the challenge in the culture, the difference between understanding the risk between the top management and the employees. You will have a very clear understanding about risk management in the top management. You don't have, unfortunately, the same understanding in all branches and every single employee. And that's the role of the risk department to raise the awareness, to raise the risk culture. So this is the second level, the operating model. Now we will move to the third level, which is methodology, how we identify, measure, analyze, and mitigate risk. And this is all about tools, having the right tools, having the right system, having all the right methodology that we need, such as a scoring model, a rating model, fund transfer pricing, some models like stress testing, scenario analysis. All these models, I think, Henry, you will speak a bit more in details about stress testing later on. So these are models translate our strategy, translate our operating into how we're going to measure this risk. And very important point, make no mistakes here, risk management and enterprise risk management framework is not only about reducing risk, which is the main target, but also it's about maximizing profit and maximizing profitability of the banks. And that's why we see some of the risk management tools, such as risk-based pricing, fund transfer pricing, profitability management, risk RAROC calculation, and all of these targeting the maximizing the profit of the banks by reducing the risk exposure. So under the third dimension came the methodologies, as I mentioned, here all the tools, all the scenarios analysis, and here actually where the real work happened. But very much depend on the first two dimensions, strategy and operating model. Now, you build the first 4 level, and you have first 3 levels, strategy, operating model. You have your own methodology. Come the next step, communicating. how to communicate, how the communication will happen for the risk management framework. And when we speak about communication, very obvious, we speak about two types of communication. We have the external communication, the very famous annual report, our risk report, what we provide to our supervisor, to the central bank, and so on. And then we have our internal reporting, which is as important as the external reporting. Internal reporting being able to provide all the decision maker in the bank with the right risk management information to make a scientific decision, to make a well-documented decision based on these reports. And that's the type of reports that goes around the institution. Should be a regular report, weekly, daily, semi-annual, annual report, and so on. With communication, we speak about reporting, and we speak about the culture communication. That means being able to communicate with the team around what's latest development in risk management, particularly some aspects when you need to focus on the communication with the team, such as operational risk, being aware about what type of operational risk. What my colleagues spoke about the security, cyber security risk. This is communication is a key to reduce your cyber risk. Communication is a key to reduce your operational risk, and so on. Finally, building all of this, it's very much depend on a strong infrastructure, a strong core banking system. And by strong core banking system, I mean being able to maximize the benefit of this core banking system. I'm always saying risk management is all about data. So risk management, it's 4 components: human, data, data, data. The more data you have, the better you will be able to manage your risk management and being able to make more accurate decision. And that's why being able to have big data management, the good infrastructure, the strong infrastructure to build the historical data, these are the key aspects, and that's the final base or the base. This is the infrastructure in terms of core banking system, IT, and so on. So this is the enterprise risk management framework, the main structure that we should use to build the enterprise risk management framework. Yeah, I cannot be in Egypt without giving an example about football. Always the question comes, who's responsible for risk management? Is it only the risk management department? I mean, I don't want to speak to these guys. They will manage it, and as a business, I need to fight with them and make sure that they will accept the loan application and so on. The responsibility of risk management in the banks, exactly who's responsible to protect the goal. We can easily say it's only the goalkeeper. I'm going to just focus on whatever I'm doing in the front, attack, midfield, whatever. Or we can say, and that's the reality, it's everyone's responsibility. And I'm pretty sure a lot of football fans here, between the 2 photos to the right and to the left, it's very obvious that the one to the right, the penalty kick, it's way more risky for the team than the free kick. Simply in the free kick, you have the rest of the team as a wall, as a defense, as an additional defense. And that's part of the culture, that everyone from the team, from the football team, whether you are midfield, attacker, or defense, or the goalkeeper itself, everyone responsible of protecting the goal, and that's exactly in the risk management. Everyone is a risk management ambassador or champion. And of course, the main responsibility, the coordination of work fall on the goalkeeper. This is where nowhere stand and say, move right, move left. He's just giving direction. This is the risk management department, the risk management committee who try to make this communication with the team. They are the main coordinator, the main owner. But make no mistake, they are not the only owner of the risk management. It's responsibility of everyone.
Except the risk, except in football, the risk of Mo Salah, you cannot prevent the risk.
Yeah, I mean, being in Egypt, definitely we should link risk management to football. And actually, before I came here, I was having dinner with some friends, and they was like, I was saying I'm going to Egypt, and they were like, oh, Mohamed Salah, yeah. I was like, yeah, he's not going to be in the airport waiting for me. But however, the connection between the football and the 3 lines of defense, this is what Basel Committee on Banking and Supervision actually did it. This is where we come, the very famous 3 lines of defense. This is somehow you see the risk management department sitting on the second lines of defense, while we have the 3 lines of defense responsible for the risk management. And that means the business as a first line, then the risk management as a second line, and the internal control at the third line. And this is exactly what Dr. Kholy mentioned at the beginning, the importance of the connection between all departments, between internal audit, internal control, the risk management, the business line. The business line, the loan officers, the branch manager, branches, these are the first line of defense. These are the, your hand and eyes, the first contact with the client, and who can reduce the operational risk to the minimum, who can reduce the cyber risk to the minimum, who can also reduce credit risk by creating clean portfolio, be able to manage the clean disbursement, manage the good communication with the client. And that's why all these 3 lines of defense are responsible for the risk management. Of course, being in a conference under the patronage of the central bank and the API, we should not forget the role that the central bank playing as being in the 3 lines of defense. Basel Committee on Banking and Supervision, I think 3 or 4 years ago, issued a very important paper, a very nice paper, back in 2015, and said, no, wait a second, it's 4 lines of defense, let me add 1. And they added the 4th line of defense, and additional to business, risk, and internal audit, they said the regulator. So now you have the 4th line of defense, regulator, external audit, as responsible for the risk management in banks, and not only responsible as a compliance supervisor. With the new trends for central banks to move from compliance supervisor toward more risk-based supervision, the role of central bank also raising awareness, so playing an essential role in risk culture, exactly such like this event and a lot of events where supervisors want to enhance the enterprise risk management framework.
Let me interrupt you in this, because maybe some of our foreign guests doesn't know what happened in Central Bank of Egypt during the last period since 2004 up till now for the banking reform, starting from Governor Dr. Faroul Ouda and moving to Mr. Tarek Amer, who was the deputy governor in the banking reform system that applied since 2004. The meaning of this and the aspects of this banking reform was dependent on creating the control function inside the bank. And what you did say now is applying in the banking sector. The banking supervision is now talking the risk, the risk audit basis, not the compliance basis, especially on the on-site inspection, and on the other side, the off-site banking supervision is putting their hand on the pulse of the banking sector 24/7. And also in the licensing department, in order to be a CRO, in order to be a head of audit, and in order to be a head of compliance and governance, should be licensed and approved and examined and interviewed by central bank. And in every central bank inspection round or session in the banks, the importance of the control function coming on the first aspect of the inspection round. This is very important for our guests to know that now we have a modern regulator and a regulation type, and we are moving to the next. That since I was a staff at central bank, Mr. Tarek Amer was thinking that we should improve the skills of our CROs, head of audit, head of compliance, head of governance, not only by making such conferences in Egypt, but to send them like we had 2 training rounds. The first one that was the graduation of the future leaders here in the conference. And the second one, I think, ABI, Mr. Abdulaziz can tell, make 2 rounds in Harvard, yes, in Harvard, for the senior bankers, in order to enhance the culture of not only the business and control function.
Exactly, and I think this is exactly how the supervisor and regulator sitting at the fourth line of defense in banks and having the honor to work closely with CPE and the FRA in Egypt, I know how much now the shift toward more risk-based supervision, the risk awareness, risk culture, being closer to financial institution, and that's exactly following the international best practice. Thank you very much, Mr. Kholy. The last question I think Mr. Kholy asked, what the future? And our conference is about future of banking, and the question is how enterprise risk management framework contribute to future of banking. First, this is from the World Economic Survey, and unfortunately in Western countries, but somehow the future doesn't look as bright as it was like 2 years ago. People are expecting high inflation, some financial crisis, and that's reality. And of course, when we speak about any financial crisis, banks, financial institutions are key players to reduce the impact of any financial crisis. They are key players to be built what Dr. Otto mentioned, to resilience economy or resilience banking. And that's why the very important role of having a strong enterprise risk management framework to meet the needs of the future. If we will go back again to the level of or the dimension of enterprise risk management framework and think about the future, what can I develop? If I will go back now to the banks, I want to how I can develop my enterprise risk management framework for the future. First, of course, having clearer strategy, having a strong risk appetite framework in the institution that is resilient toward any financial crisis. Second, having the risk culture, having the communication and the operating model about the future, about what's our target in the future, and also not only looking about, let's sort of say, any financial crisis, but also toward growth, being able to think about different business model, being able to manage risk in different type of business model, thinking about more cyber risk, more about IT risk. And methodology, developing more advanced methodology for the future, building more data. The data now, the future now all about data, being an institution, data-driven or risk management institution, having a stronger communication in the fourth level, and finally, infrastructure, as I mentioned, it's very important, the bottom of the enterprise risk management framework for the future of banks. You want to have the digitalization shift, the data management shift. You need to be ready to offer the same service in the different world and the platform online, reaching all and every single Egyptian, even in the very rural area, through remote banking and so on, and that's required a strong core banking system, a strong infrastructure for enterprise risk management framework. My last slide will be, thank you very much. Again, thank you very much, ABI, for such an amazing conference. Dr. Abdelaziz, for your effort and hosting us. Always a pleasure to be here in Cairo. Thank you.
Thank you, Mr. Basel. Finally, we will have Mr. Henry for the very important topic, and modern topic, and I will give him a very important gate that most of you are suffering in the banking sector every year and every 2 years for the internal capital adequacy process that is asked by Central Bank of Egypt to be done every 2 years and to be reviewed every year. And I do believe that you should review it in this point of time during the crisis that we have globally, not every year, every quarter, and every month, and every minute. So we have here the internal capital adequacy process that we used to have stress testing modules. My question to you, that what are the main objectives of the stress testing of the financial institution, especially banks, and what type of stress testing we should use financially and non-financially, because most of the people, when they heard about the stress testing, they thought that it's a financial stress testing, interest rate, ECL, downgrading, upgrading, foreign currency risk, something like this. And how frequent should we have this stress testing in the normal circumstances, and in the special circumstances, the hard days, how frequent we can use it, and what is the process of stress testing? Should we depending on stress testing modules that coming from a vendor or outsource, or should we build up our internal stress testing module?
I suspect that our distinguished moderator knows the answers to all of those questions, but let's go. So, good morning still, thank you. Thank you for inviting me. It's an honor and a pleasure to be here today to talk to you about stress testing. So, I am the global head of legal entity stress testing at Citi. I cover about circa 60 ICAPs and exercises that we do all around the world. We have banking subsidiaries, we have broker-dealers. It is quite complex, right? Normally I would talk for about 14 hours on this topic, but I'm going to save you that pleasure. If we could bring up the presentation, I'm just going to talk through some of the things that matter most to me and connect them with the questions that have been asked.
Can we roll on the presentation, please?
So let me talk a little bit before the presentation comes up. The mics, can you hear me now? Yeah. Does that work? Right. I will just lean into the mics a little bit. So just to touch on a couple of things before we go into the presentation. I want to differentiate from what Mr. Colbert said yesterday. The non-financial assets of a bank today are both people and data. And we need to pay attention to both. The sort of foundations that you've heard today of enterprise risk management, people and data, right? How do we solve a lot of the problems in cybersecurity, people and data? So let's think about that as we go forward through stress testing, right? So here are the things that today matter most to me, right? And I'll just run down them. Risk identification, horizon scanning, being on the lookout for what might happen. And we're going to talk in a bit more detail about how to think about stress scenarios, okay? Scenario design and construction. We need to do many things here, right? We need to think about stress testing as a tool that clarifies the boundaries in which we operate, right? It's not a desperation and a fear. It's not an aspiration and a possibility. It is part of how we make well-informed decisions. As a managing director at Citi, my role is simply two things. Remove obstacles from other people's path, people and data, right? And secondly, bring about well-informed decisions. It's not my place often to make those decisions, but it is my responsibility to make sure that they're the best decisions we can make, right? And this is where scenario design and construction is very important. We'll touch on that. Model risks. Citi has huge amounts of data, and a lot of it relates to what happens in the US. How relevant is that to Egypt, right? We've got to ask some pretty tough questions. So resilience in risk management for me is being prepared to ask tougher questions and continuously call it for what it is, right? Integration, the enterprise framework. How does it hang together? Capital versus liquidity. When does that stress mean that you're dipping into your capital to buffer liquidity, right? How does that change your thinking, right? We're going to maybe pose some questions to you that might make you feel a little bit uncomfortable. Let me give you an example. Operational risk, stress testing, okay? When I think about maybe actually cyber, right? A bad actor targets your firm and with 2 lines of code cuts you out of a clearing service, which is critically important for your clients. Just 2 lines of code. So how does that make you feel? Are you sitting there a little bit uncomfortable? Could that be my institution, right? If you feel uncomfortable, you care, and that is a good sign. Stress testing is about how to turn that concern into something that you can decide what to do next about, right? We could talk about risk appetite frameworks. That's usually 15 hours on its own. But those are critically important. How we tie all of this together so that the board is in a position to challenge management on their decisions and know that the risk appetite framework is wrapped around that strategy, right? It's not about risk capacity. You could probably take a lot more risk. Risk appetite is close, wrapped around your strategy. And when you start to go that way, your risk appetite should give you an early warning that something is not working or something is changing, a new conversation. Reverse stress testing, recovery plans, resilience. These are very important, right? Reverse stress testing for us at Citi is identifying the point of non-viability of your business model. That's really uncomfortable. Sitting down with people and saying, how could we fail, right? But it is important. You've got to have an honest conversation around that. So these are some of the themes. Let me just dwell on one of them, scenarios. So I think about scenarios with three lenses: the narrative, the amplifier, the outcome. And the most important one to me is not the outcome. Yes, we've got models where you can put GDP up, down, left, right, and out comes a number. Those are important. But the amplifier is the most important thing to me. So let's take a look. Physical climate risk in Zambia, right? And I don't mean to pick on specific countries. This is hopefully objective. The narrative or the trigger is drought. The amplifier is the near total dependence on hydroelectric power that the copper mines have that are the main source of revenue for the government. It is turning a narrative, a trigger, it is amplifying it, it is turning it into something that we need to be concerned about. Amplifiers are the things to think about, right? We have transition climate risk in Nigeria. Nigeria exports a lot of crude, but imports almost all of the refined products. So what happens when carbon taxes eventually come through and that spread widens? How resilient will Nigeria be to that, right? So understanding your amplifiers is quite key. The two lines of code that can unlock and make it very difficult for us, right? So amplifiers are really where, if you like, the analysis comes in. But the last point, you know, if anybody tells you that stress testing, yeah, we've got that sorted, I don't buy it, right? It's a continuous learning process. The feedback loops are critical, right? As we look at new amplifiers and we say to ourselves, would our risk identification even make us aware of our sensitivity to that risk, right? So this is an important part. These exercises, ICAPs are not a regulatory report. It is about how you integrate enterprise risk management, how you partner with the business to make the best well-informed decisions, right? Stress testing is a part of that. It's not the whole ICAP, it's an important part. But that feedback loop is quite critical. So how good are we at seeing through these relationships? Do we need to change, right? So for me, just now, you know, if I think about Egypt, I worry about grain storage, I worry about capital outflows, I worry about these things, right? More generally, I think about climate risk. And the reality is that none of my models, and I would wager none of your models, can cope with climate risk. There's no history where climate risk has happened and something is observable and you have a statistical model to cope with it. So in a few years' time, when carbon taxes start to become real, right? What are you going to do about your provisions? What are you going to do about your stress test models? We need to get ready for climate risk, right? It's not straightforward. Another thing that worries me, this relationship between real GDP, interest rates, inflation, the country, the exchange rates, right? We've seen with the recent crisis and Russia-Ukraine war, everybody was saying 6 months ago, yes, we're worried about transitionary inflation. Now it looks like it's not going away for a while, right? So how good were your horizon scanning? How good was your stress tests 6 months ago? Did you even ask the question, what if inflation is here to stay? What will that do, right? So these are tough questions, but the rewards are many because you have better informed partnerships, strategies, business model decisions. Even at the micro level, the scenario analysis that our colleagues in cybersecurity are doing is making sure that a bad actor cannot get in and in 2 lines shut down our bank, right? So these are the virtuous loops that can make your firm more resilient. So I would recommend thinking more about points of non-viability, and it is uncomfortable. In operational risk, your amplifiers are typically internal issues that you may not want to talk about, right? But please have an honest conversation, right? And remember, people and data, those are the only 2 assets we have at the end of the day, right? So all of that, then, it's important to say, well, when I've done my ICAP, when I've done my ILAP, what have I learned? If you just stop there, that's not enough. You need to take the learning from that and feed it back through. And that's often in the risk appetite framework. It's often in our strategy conversations. It's often in terms of improved risk-return metrics. Okay? So that's all I wanted to cover. I wanted to pick up the themes that you've heard today, and I wanted to try and shorten my presentation so that we could actually talk a little bit to you and hear your questions. So with that, I would like to conclude. Thank you for the opportunity again.
Mr. Henry, thank you very much for this very comprehensive presentation that leads me to ask some question. The first question is personal to you. Why do city people write Citibank by I, not by Y? Sorry, I know. Okay. Very important 3 topics that was included in Mr. Henry's presentation that we heard about. The climate risk. The climate risk is very important. And as we have from central bank during the last 8 months, that every bank should have its own consultant regarding the climate risk and the carbonized that comes out from the industry that we are financing. Maybe in the future you will see central banks are put a regulation on the banks in order to have a provision against such industries. Another thing that the uncertainty outlook. This is the circumstances that the world is living now. We have nothing certain. We didn't see maybe some of the people that before, I think Dr. Muhammad Arian, the famous economist, was warning about this since 2-3 years ago. The global inflation is coming, and nobody was listening. But it has kicked up after and within the Ukrainian and Russian war, or the Russian-Ukrainian war. This is the uncertainty outlook. A political event caused an economic risk. So the inflation mood that we have now, Henry, in our global society and the country, like Egypt and the Middle East, what do you think that, who is leading the association? the auditors, the risk managers, the line of business, or should we make an enterprise between risk, line of business? What do you think?
I mean, for me, it is at the enterprise level. You know, but let me be clear what I mean by enterprise. The challenge of being able to look at your financial holding company and operating company as an enterprise. You want to sit there and say, I've got liquidity, I can pull it from here and post it there, I can take this capital, that fungibility of your financial resource is one of the benefits of having a solid enterprise risk management structure. But your enterprise risk management needs to look at the foundations on which you are built, right? And things like climate risk, right? This isn't in your P&L, right? It's not there yet. When it gets there, it's probably too late. You need to start thinking about it now, and typically that's through an enterprise view, right? But don't just assume everything's fungible. You have to think, you know, so for example, even at Citi, right, it's a very difficult conversation. For a lot of people, physical risk is mortgages, it's our consumer business, and it's out in Asia at the moment, right? But if you talk to the people in Zambia and Kenya, if you talk to the people in South Africa who went through horrendous rains and a loss of life, right? It's here and it's now and it's happening. And our challenge is to understand, is it a systemic risk, right? Or is it idiosyncratic? And increasingly it becomes systemic. Something is going to be happening where in a country where Citi operates all the time, right? And that's the reality. So for me, it's an enterprise level function. Now, on the flip side, inflation and the other challenges we have, these are manifesting through all of those traditional risk stripes. But it's important your enterprise function can look across that consistently and say, and this is what it means, right? So you have to be, I don't want to use the word, but I'm going to, adaptable.
Adaptable, yes.
Right? And there's no fixed prescription. We're going to have to navigate a lot of uncertainty. And this is where the conversation around the boundaries is very important, right? To lead through uncertainty, be certain about the uncertainties, just call it. But the important thing to help your people lead through that is to be clear about the boundaries, where to avoid, where to go, what matters most on a forward-looking basis, right? And stress testing, BCBS 239, data, these make your boundaries more tangible, more concrete, more important, more effective in the management of the firm. So this is the challenge. Sorry.
Thank you, Henry. I don't know how much left for time for the questions. Donia, how much time for the question? 5 minutes? Okay. Before the question, and very quickly, the magic word of the enterprise risk management and the resilience risk and the cyber security and the stress testing, all of this. The magic word is governance.
Yes.
This is the magic word, governance. Whenever we implement a governance, a proper governance in our banks, as financial association, believe me, you will succeed. Sharing opinion, not be a one-man show decision making. Please share opinions with your colleagues, open discussions, delegate authority for a committee, respect the reporting lines to the board committee and the senior management. Please respect the regulation. All of this is governance. So governance, in my humble opinion, is a magic word that will lead to a proper risk management, a good enterprise risk management, and finally will prevent the bank from any unforeseen or uncertainty risk that we will see. I will tell you in 1 minute story of a multinational bank that in one time I was not working in. I refused to work on that bank and to join this bank, despite that they were acquiring the bank that I was used to work in, because they didn't believe in operational risk. Right, Mr. Hatem? They didn't believe in operational risk. And they tell me that every staff should be an operational officer to his work. So after a year from this, the CEO of the bank outside in Europe used to make his speech for the financial year end to the shareholders and the depositors and the client. And he used to say that we have a remarkable achievement in the bottom line of the bank to reach 6.5 billion euros in that year. It was in end of 2006. But the CFO of the bank entered the office of the CEO, and this is true story. And he asked him to adjust the number and to exclude the 6 and make it 0.5 only. Where does the 6 billion disappeared? They will have a treasurer. He used to work in Boston office and deal in futures and the swaps in oil commodity and in metals. And there was no process and procedures and policy to control such product at the bank. So he used to have gain profit and the other day have a lot of losses. And nobody was supervising or controlling these losses because he can hide it. It ended up by a loss of 6 billion. 6 billion. So please, I'm asking you to take care about your risk management people, to invest on their capability and the capacity, to invest on their module using, and also to have the proper support of the bank's management. And I would like finally, Dr. Richard, you're still with us, yes? Yeah, thank you. If you have any question, please, anybody want to have a question? We have the mic here, I believe, and he can ask the question he wants. Here we have a question. Here we have a question. The mic in the third row, please.
Okay, before I start, this is Khalid Kholy from National Bank of Egypt. Khalid Kholy. Okay, now the business model or the banking industry is changing nowadays from a classical model to a modern model. And again, depending on the purpose of each bank is changing. Like the purpose for government bank is different from the purpose of commercial bank. So now the question is, in the current scenario where the model or the industry is changing, how can the risk management be changing as well to adapt to the change happening in the industry? To make myself clear, how can the risk management adapt to the change happening in the industry, since we all seeing this change happening to the banking sector as well? Thank you.
Yeah, the question here is how can the risk management at any bank adapting the modern services like digital service, for instance, or another services that can be created in the sector? How can risk management applying to be adapted to prevent the risk coming from such new and modern services? Henry, can you reply for that?
Yep. No, it's a very good question. Look, I am a big believer in people and the resource that they represent. I think a good characteristic of a risk manager is being known as someone who brings multiple perspectives on a problem. And a good risk manager should have the courage to say, I don't understand this new thing, right? And I need to, right? I need to get comfortable with this, right? And it takes courage to say, I don't understand what you're talking about. You know, I walk into a room full of traders and, you know, they're talking at me. And sometimes I have to stop them and say, I do not understand, but I can't leave the room until I do. So let's just row it back and work it through.
Can I add something for Henry? Can I add something for Henry, please, before you? And we can take a chance for another audience, please, in order to make the discussion fruitful. Also, the management point of view and support. If the management of the bank will not support the risk management people, then everything will be allowed without process and procedure. For instance, if any bank wants to be a digital bank and they didn't have the capability is human resource, systems, process, procedures. If we don't have this capability and want to move to be a full digital bank, this is a huge risk. When you are creating, like the English people said, when are you creating a bank, when are you building a bank, you're creating a risk. So every single service that may be introduced, not only in the bank, in any financial institution, will create a risk. So if you are not capable to prevent those risks, so don't do the service. Don't do the product. It will hurt your reputation at the end. Can we have another question, please? Please, the lady in the third, the lady here, please.
Thank you for the presentations. It was very valuable to me. My name is Ghada Mustafa. I'm from the e-bank in the risk group. I have a questions that relates actually to the topic of the resiliency and the ERM. Resiliency, I guess in Egypt, we've passed through so many events over the past 2 decades that made it for us easy to develop crisis management plan, business continuity plan, and even enrich them on every event by several scenarios and several controls, or setting, I don't want to say accurate appetite, but at least appetites that make resiliency function well. So we have now contingency, we have business continuity plan, we have crisis management plans, and we have also the incident response plan, which is the whose owner is the CISO, I believe. It does have its stakeholders, and sometimes I wonder how can we fit all these plans into one ERM plan for continuity or resiliency of the bank. Ownership, exchange, integrating all these plans together. I know that the results of all these plans is to set and revise our appetite or tolerance, like the RTO, the RPO, and so on. So for the incident response, I really wonder, is it only how can we respond, or there is certain appetite that we need to set, and how can we consolidate all this together? That's it.
Thank you. Dr. Richard, are you with us?
Oh, yes, I am. Thank you.
But would you like to conclude the question, or it's okay with you to answer?
Yes, let me answer.
Because the question have two parts. Part from in the resilient risk, and the other part will be in the enterprise risk management, where is our colleague Basel. Thank you, Dr. Richard, please.
Yes, thank you very much, Mr. Kholy. A very good question. Even if we have got a long history of certainly stress testing or setting standards or having, contingencies, thanks to the great work that the banks have done in Egypt. In terms of resiliency, one thing to remember, very important, is anticipation, prevention, and adaptation, critical. And there is no scenario, even if you are well aware of a scenario 2 years ago, 5 years ago, 10 years ago, certainly it will not be the same going forward. So the key in terms of resiliency is having a risk management team, a crisis management team that is dynamic. And the problem a lot of banks have had is not to care about the dynamism of that crisis management team. It has to be dynamic. Secondly, we have to keep on testing our scenarios. And the scenarios keep on moving. It's very critical. It cannot be the same. And normally in terms of resiliency, you have to be testing. You may have a tolerance, a risk appetite framework, but we have to keep on testing our impact tolerance. To what degree do we breach our impact tolerance? So this has to be regularly tested going forward. And finally, which also relates to the first question in terms of our risk management, if there is potential for change, is that we cannot rely on simply a quantitative risk model. That is critical for now and for the future of our industry. Is we have to find ways of incorporating qualitative risk measures as well, and which is critical. A quantitative risk model which is well tested may also not survive for many years. So we have to keep on adapting and actually asking questions about our assumptions and inputs. Thank you.
Thank you, Dr. Richard. Would you like Basel to add something quickly?
That's indeed a very good question. I mean, we develop a lot of documentation, a lot of policies, procedures, business continuity planning, liquidity contingency planning.
Close the mic to you, please.
When we develop these documents, the hope that we will never use them. We don't need to get to the point where we're going to use these documents. I was 2 weeks ago in Europe working with the banks for development of recovery plan for DSIB, or systemically important bank. And what we told them, we hope that you will never reach to the point where you need to open the book and implement the recovery plan. How you don't reach this? 2 points. First, you have your key risk indicators, and these are part of the early warning system or the early warning indicators. You're not going to wait until your capital adequacy ratio go below the supervisory threshold. There is the green light, then come the orange light, and before you need to activate your recovery plan. And building such system, building the early warning indicators, the risk key indicators, and integrating this system in your risk appetite framework that been approved by the top management, that's exactly the answer, I think, to your question, that we don't wait until we need to activate the risk recovery planning. These documents are important, must have, but we write them always with the hope that we will never need to open these documents and do fire sale of an asset or do recovery plan, because we have a strong key risk indicator, strong early warning indicators to alert us before we get to the point, the burning point, and particularly very important that the risk indicator, these dashboards of early warning indicators are an interactive indicators that may need to be updated regularly. What could be an alarming points today could be too late in 2 months. You need to change these risk indicators based on the macroeconomic situation, based on your internal liquidity, and so on. A very good question. Thank you very much for asking it again.
Thank you. Thank you. So we should take care about the key risk indicator in the first stage. That's number 1. And number 2, a frequent examination for those key risk indicators and a very clear risk dashboard, like Basel just said, to be presented to the risk committee and to be in front of the senior management every now and then. Last question, if you have. I believe this is enough. Okay, finally, let me thank my guest speaker, Mr. Henry, Mr. Basel, my dear Abeer, Dr. Richer from abroad, and let me thank also our colleagues in ABI, Mr. Abdelaziz, and I hope this was a useful and dynamic and fruitful session for you. Thank you very much, and see you.